Hello, everyone. Again, this is Gilbert Jalad. I'm talking to you here from CPLS headquarters downtown. This is Tufts On Tax, where all your tax law questions are answered. Any trouble you are having with the taxes regarding lawsuits, trouble with the employers, businesses, friends, family, even with the IRS. Your peace of mind is right here with Mr. T. Scott Tufts. He's the master when it comes to taxes, and also he is an expert. You can call him anytime at 877-647-7887. Again, 877-647-7887. Or you can visit the website at cplspa.com, or you can email him at stufts@cplspa.com. We're going to have it on the screen. So Mr. Tufts focuses on how tax forms and other issues impact people's daily lives in ways that are often overlooked or unknown. So how are you, Scott?
I'm doing fine, Gilbert. Good to be with you.
Good to be with you, too. So today's topic, we're going to, it's a very important topic, and we mentioned it last episode. We're going to tackle it in more details this time. I believe the American Rescue Plan Act greatly expands benefits through the tax code in 2021. So how, if you can tell us?
So, Gilbert, our policymakers in Washington make the decision on how best to provide relief in different ways, tax cuts, tax breaks, and whatnot. This particular package is continuing in an approach that looks to provide stimulus payments to certain Americans, and then also takes a look at using the child tax credit in an expansive way. With tax credits, we've talked about this before, the question becomes, are they refundable? And in other words, what that means is, do you get the credit and it only zeroes out your income, let's say, or reduces your taxes dollar for dollar, or does it actually go to where you can get a refund off of that credit?
That's a good question.
So a lot of folks are curious about that. This expanded child tax credit does provide for a refundable tax credit. And then the question is, who's eligible for these breaks? And they've always tried to put income levels or thresholds in place for where it will either phase out or be eliminated, meaning that lower income and then some kind of concept of middle income folks will get the benefit, but not the upper income or wealthy.
Of course, yeah. When they give you a number between individuals not above 75,000 a year or something like that.
Right. So on this one, it was 80,000 for singles, and then 160 for the joint as the cutoff, and then they had to phase out at 75 and 150 for the married filing joint. So a smaller little bracket there for phase out, not 5,000 or whatnot, but it's still there or 10,000, I guess, at the married filing joint level. But again, the idea being that they're trying to provide this stimulus in these difficult economic times.
And you brought a good point, and that would bring us to the next question. Now, you said, how is that going to affect the refund or the money that they will get back if they do have a refund? Now, and that would. The question would be, how is that going to affect us in the future now for whatever tax season, and in the future? Are they going to collect that from us?
Yeah, so our taxes will go up. Like most policymakers believe that taxes are going to go up for the wealthy, for corporations and whatnot. The real question, I think, is across the board tax increases. We expect the estate tax to go up. We expect the gift tax to go up. And again, when I say taxes go up, it may not be the rate. It may be an exemption or something. So we have to look at that from a standpoint of what the tax policies will be. What we want people to know right now is that this policy that over the last 2 years where credits are being done and stimulus payments are being done, we're about to turn the corner and really get into potential tax increases. So we encourage folks now to do the gifting or do the kind of steps they need to take now to ready themselves for the increases of tax that are likely to occur.
Other things that we have to have in mind and look for or pay attention to when it comes to filing our taxes after receiving.
Right. Well, we've got an extension of time for those who haven't filed yet. It's going to get into May from what they've done recently to extend a little bit of time to file. Many people went ahead and filed if they were in a situation where they wanted to pick up a stimulus payment and they had some issues. So folks are trying to get their 2020 taxes in order. The real key here is going to be how much more relief is coming versus how much more pain is coming.
That's true.
And I think relief and pain are the optimal issues. And none of us can guarantee the future, but many of us have said for a while now that lower tax rates are not likely to stay, especially with changes in the policymakers or their views of where we are as a country. So we have to stay vigilant and look at what's coming in the next tax packages.
Absolutely. It's been a rough year for everyone. And is there anything else we need to think about when it comes to the American Rescue Plan Act?
Well, I know there's an unemployment benefit that folks talk about. There's some concern that it might continue to disincentivize folks, meaning the idea that if you keep folks on unemployment benefits too long, they won't get back out in the workforce. I think that's an understandable concern. So it's balancing immediate pain or relief for pain versus a longer-term policy. I don't think folks have realized that for many years. Well, they probably realize it, but our tax policies have punished certain behaviors and rewarded other behaviors. And there are folks who want to see a more neutral tax policy approach. It's going to be interesting whether anything like that would happen. I don't try and predict anything, but I can say, as we deal with all the complexities, what taxes are doing are collecting data. And we've talked about this. These forms that we're looking at and whatnot, what folks have to understand is these forms have a lot of questions in them. If you really go into your tax forms and actually looked at the hard copy of them, you'd see questions asked of you, like, are you involved in any virtual currency or Bitcoin? And you've got to answer that correctly. And because a yes or no can mean everything between potential criminal exposure. So just like if you have a foreign bank account or signature authority over a foreign bank account, you've got to look at your K-1s and 1099s and make sure they're correct. If they're not, you've got to step up and call them out, if you will. Try and get them corrected. And if you cannot, then there are steps you need to take. So our big push here, and what I've been trying to do, is say these forms seem kind of innocuous, or you just get some program to do it, or your accountant does it. But the reality is there are questions in these forms. You need to know where those questions are. You need to know how you're answering those questions, and you cannot just kind of pass the buck onto your accountant or on the computer program. You will be held accountable, and so I'm trying to get the word out on that.
That's very important. And we mentioned that briefly last time, that you have to be mindful what you're answering, what do you have on the forms. And of course, like you said, the accountant will help them, but they need the expert like yourself to go through all of this and make sure that they have everything in order.
Yeah, and I'd say one last thing on this. I'd like to see folks kind of look at tax returns as the data gathering process and compare last year and this year. The government does this. They look at you and say, well, you made this much last year versus this year, and your businesses are compared. The programs compare your performance and the taxes you're paying and the percentages of expenses compared to taxes, so that they can maybe pick up audits on folks. So the same thing you can do with the tax forms. Why are they changing? Every year they'll tell you this is how we're changing how we're gathering the data. It ought to be able to be something that our folks, our clients and people that come to me, we can show them this is what they're looking at, and you can see what's important to them by the questions they're asking. So you can't bury your head in the sand. You got to be proactive and vigilant, and I'm hoping that through the podcast we can get folks to do that.
Absolutely. We mentioned a little bit last time, and I'm sure we're going to revisit this topic again this year. And
we'll revisit and see how it's coming along.
Yes,
and I look forward to the interviews we'll have with folks who are in different areas of the law, because they'll have different perspectives. And what I like about that is they get a chance also to talk about what they're doing, and then I try and coax out of them how these little tax forms and these tax situations actually impact their situation. Tax touches everything, for good or for bad.
Yes, absolutely. I guess this would be the end of the episode today. I know you're on the go. You have so many things going, and tax season, and you're on the go. So we'll end it right here, and we'll still, like we said, we'll revisit this topic again,
100%,
and with other attorneys, and
next time maybe we can sit down with some folks, talk about these tax policies and how they're impacting our clients and the people out there.
Absolutely. It's always a pleasure talking to you and discussing taxes, and I learn every time from you. I'm sure the folks here learning as well. Thank you, everyone, for listening. You can call Mr. T. Scott Tufts at 877-647-7887. Again, 877-647-7887. It's going to be on the screen. Also, you can email him at stufts@cplspa.com or visit the website at cplspa.com. And thank you, and have a wonderful day.